Hi everyone, before I get into the video, I just want to tell you Shashwat has a new article about Nike up on his Substack page. Please go read it. Rupesh would have put the link for the article down below. Click on it. Those of you who are really interested about American stocks, how to analyze American companies, must read article for you to understand how to fundamentally analyze American stocks. And even if you're not looking at American stocks, it's a great article to read to understand how to look at Indian companies too. So give that read and do let me know in the comments if you read it and what you thought of it. Thanks. Hi everyone, welcome back to Be Rich. It's me Vinod here, and I'm here to give you some information regarding Kalyan Jewellers, what you should do, then regarding defensive stocks, which everyone's talking about, and then some other news here and there which I've gathered, which I wanted to share with you. But before I get into that, something which I was talking about in our group in the morning, what I was working on was something the idea of staying present while investing, because in a world full of distractions, it is the hardest thing to do. Trust me, even I suffer from this. Getting distracted by the easiest and the smallest things is human condition. So try and be present all the time when you're investing. Don't get swayed by market news. Don't move around and try to figure things out and complicate it more than it needs to. Because investing is a very simple thing to do, but it's a very hard thing to follow, for the simple reason because it requires very little mental activity once you decide on what you're doing. Like anything which we decide to do, which we want to make it a routine. Like if you really think about it, if you try to make brushing your teeth a mind activity, it can be very boring. So we try to do that in meditation, where we try to create presence in the moment. If you're able to do that, great, that'll be really useful for you. If not, try and keep it simple is all I'm saying. Log in, buy these few things and move on. Because each day you spend investing is a day of progress, and these days adds up into months and they add up into years. One of you had kindly commented saying that we don't really share real information of how the companies we are talking about has done and how we just sit here and we faff and we really don't know what we're talking about. Granted, I'm not saying I'm a subject matter expert. I am a beginner just like you, but we've been doing this for some time, and I have shared some data on Instagram on what we have been talking about so far and how the companies we have been looking at and talking about using tested and tried methods of Warren Buffett and Benjamin Graham and Charlie Munger. These are not invented by me or my brother. These are tried and tested value investors who have suggested these methods. Using those principles, how we have been investing over the last year and how those stocks have done over the last year in terms of appreciation. Some were winners, some were not winners. I've been very transparent and I've put it in the Instagram group. So if those of you who have questions about our methodology can definitely go look at our scorecard and then decide if what we say makes sense. I do agree, value investing is not for everyone, and there are people who like front running and loading the market with a specific share and quickly selling it as soon as it appreciates. They have different strategies. This is our strategy. It is a strategy which we like because it lowers the risk, because we are averse to risk as humans, and any process which lowers the risk for me, I would love it. And this is the process which works the best for us. So this is why we are doing it. And I'm not saying that you must do this or you mustn't do this. I leave this purely up to you on how you wish to go about it. I know I've taken 3 minutes to get into this before I get into the stocks, because it's very important that you understand this, because Kalyan Jewellers is a case in point where it's complete distraction. There are different layers of distraction in Kalyan Jewellers. First, if you were fortunate enough to buy it way back when my brother was recommending it, you would see some serious appreciation in stock. True. Second case in point, those of you who've seen Kalyan Jewellers from its all-time high will see some severe correction in Kalyan Jewellers. I'm sure Rupesh will put up the graph to show you how much Kalyan Jewellers has come down from its all-time high on the screen now. You'll see that. I understand the pain you feel. So now we have got different segments in this confusion. We have a set of population who have bought Kalyan Jewellers early and they have seen their capital appreciation going up. Now they are wondering nervously, we have lost so much. You haven't lost anything. The amount of money you put from there, you have still very positive, so don't panic. Because the news surrounding Kalyan Jewellers has been just rumors, and the company has come forward and they've clarified all these rumors. Fundamentally, there's nothing to worry about. People who are selling Kalyan Jewellers are the FIIs and the DIIs, and they have their own reason for selling Kalyan Jewellers is because they're booking profits and they're seeing the year ahead being a little tumultuous. So they need to show their customers and their clients revenue. So they'll book profits where they can and pull the money out and show them revenue. So it could be just that. The other set of people who I have is people who did not buy Kalyan Jewellers when my brother was recommending it. Case in point, me, Rupesh, who missed out the Kalyan Jewellers boat, and now who are looking at it and saying, sir, it is corrected so much, Rupesh says. Should we consider it? Of course not. It's still very expensive. And the reason why it's expensive is, if you see the case in point, the price to earnings of Kalyan Jewellers compared to its peers and its own median in history, it is very, very expensive. So there lies the problem. We love buying value. Just because something hits lower circuit doesn't mean we buy it. This is value investing strategy. If you are of another school and you believe in other strategies, go ahead and experiment with whatever you wish. I advise you not to as a value investor, and I advise you to focus on what we have. And that in today's market, if you see NATCO, for example, is very valuable. So if you get distracted by news like this, you are unnecessarily complicating your investment strategy and it gets very tough to invest. So I understand, why do you watch these videos, you ask me every day. Vinod, if all you're going to tell me the same 4 companies over and over again, what's the point watching a video? Well, my friend, the point of watching my video is not to hear the 4 companies over and over again. It is to find a person on your corner, on your side, in your ring, flapping the towel for you with a spit bucket saying, you're going to win this, don't worry, keep at it. Because we need someone in our corner to encourage us all the time. And hey, I ain't charging you anything for this. This is free. It's on YouTube. You can log in when you need a motivation. Watch me telling you you're doing the right things and keep at it. So Kalyan Jewellers, that's a story. So even if you don't believe in all what we're saying, if you look, Rupesh will share this article on the screen, I'm sure. The article says, Q3 numbers are a concern and mutual funds are buying defensive stocks. And Rupesh will zoom in and show you big mutual fund houses such as SBI, ICICI, HDFC, Nippon India, Kotak, UTI. And what is funny is, a lot of the companies which we have been looking at and we have been taking into consideration, these mutual funds are also looking at. That shows you where the value is in the market, especially in fresh buys. If you see, we have Dr. Reddy sitting there. A lot of the pharma companies are sitting there because those are the defensive stocks. Why are they looking at defensive? The reason why they're looking at defensive stocks, which is healthcare, technology, consumer durables, and insurance sectors, is because the rest of the industries are going to suffer. The rest of the sectors are going to suffer because what is happening globally and what is happening in India. Healthcare is something we need regardless. Medicines we need regardless if we're in a recession or not. Technology is required. We require computers and IT services regardless of what is happening. And insurance and consumer durables, of course, is required. Your FMCG companies. What is that? Your soaps and shampoos and your staples. We need those. So those are the companies we have been also looking at. We've been looking at ITCs. We've been looking at NATCO. We've been looking at Dr. Reddy. Right? And we're also looking at IT companies. But IT companies, what we're trying to help you focus is on IT ETF than specific IT companies, because you'll find some of them just too expensive right now to keep dipping and buying at the budgets we are looking at. So the stocks, what Rupesh is showing on the screen, if you see these mutual fund houses, there's a slight overlap in the companies we have also been considering and looking at. There are other companies which is not there in our list. I'm not suggesting that you take into consideration these companies just because mutual fund houses are buying it. Please do not do that. Please stay in lanes which we have already demarcated. Again, don't get swayed by the noise. I was only putting up this article to show you, reaffirm you that you're on the right track and your mindset is right. Not that to say you should be buying these mutual fund houses stock. I always get scared, which Rupesh always corrects me when I talk about a specific company or a share, that you guys misunderstand me or misconstrue that what I'm saying is something that you should do. Never. Even whatever I say, I only want you to take into consideration, but you have to do the work of understanding what you want to do. I want you to learn how to invest and not just randomly buy things from the shelf. We don't do that when we walk into a supermarket. Anytime I share, even in our group, Instagram group, a lot of you keep asking me for the list. Tell me what to buy, what to buy, what to buy. I am not the person for this. There are people who are in the YouTube space and Instagram space who will correctly tell you what to buy, and maybe you should follow them. I'm here to tell you how you can learn to buy. And that is case in point of Kalyan Jewellers. And that's why I'm sharing this mutual fund house. What they're looking at doing, they're getting defensive. They're looking at healthcare. They're looking at technology stocks. They're looking at, pharmas. Same thing is what we're doing too, because that is where the value is in this market. Not that we're doing something special and, I'm saying we are doing special, see, they're doing special too. That is wrong. The reason why we're buying these stocks is because that is where the price to earnings and the value and the growth is there for the foreseeable future. So keep that in mind, that it should give you that confidence. So as far as investing is concerned, it is very simple. It is very easy to do. And I would say, keep looking at it and see value on a daily basis and buy in tiffin coffee ranges, because those tiffin coffee ranges will give you confidence over a period of time. Courage is built, in small steps and small action. All of us feel very scared when we look at the market and see price swings. So if you've been buying stocks in small ranges and small steps and incrementally, especially even if you've just been doing it for the last 12 days since 1st of Jan with me, you will slowly be improving in your confidence. I'm sure a lot of you are feeling a lot more secure about investing if you've been doing this for 12 days. By the time we get into June and July, I'm sure we'll have a lot of you brimming with confidence telling me what to do, what not to do, which is what I'm hoping for. And lastly, I want to say the most important thing is get out of the habit of comparison. Comparison is what creates the biggest roadblock for a value investor. Constantly taking your portfolio and comparing it against mine, or comparing against Warren Buffett, or comparing against your friend, it's not good, because it will block you from doing your work and your creative work, because your mind will become hardened and will get into a fixed mindset, and you will not have the growth mindset. Growth mindset is trying to say, okay, today I did this, where can I improve, where can I make some progress, and keep doing that. If you aim for perfection, which happens when you start comparing, you will freeze in your tracks and you will not be able to invest any further. So as I was saying, Kalyan Jewellers news is nothing to worry about, but at the same time, it is too expensive for us to consider. Those of you who did buy Kalyan Jewellers at a very early stage, who are seeing a lot of profit, who are feeling nervous about it, can exit if you're really feeling so nervous about it. If I had Kalyan Jewellers where my brother was recommending it and it is where it is, I would not be worried about it, because at the end of the day, they're dealing in gold. And like my brother's been harping and telling you guys over and over again, gold this coming year should do very well, considering all what's happening in the US and with the dollar. And he tries explaining that, even Shashwat tries explaining that, why gold should do well, because of the conditions in the market, not because of anything special to do with gold. It is the way the nature of the beast is. I hope that explains some clarity with Kalyan Jewellers and how to look at stocks and why you should be focused on your list, and keep plugging away. I was consuming some Natco today. I do not know on this day what you had decided to look at. I hope it was something you were able to enjoy buying, is all I want to know. That said, I hope you enjoyed the video as always. I'll come again tomorrow with another video with some more information on stocks and some more information on how to do some strategy when it comes to investing as a value investor. If you have not joined me in the group, do consider joining me there. We have some really interesting conversations and interesting debates which happen. And even if you're a hater, you're welcome to join us there and give us some hate. We don't mind. We're not shy of our haters. We understand where that feeling comes from. Thanks for watching the video as always. See you again tomorrow. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.